In the last class or in the previous video, we have discussed about the certain basic aspects, right? American and European options, American options example, European options example, and option price or strike price, those kind of things we have discussed. So in this video, we'll move with the determinants of option price. That is, these are the 6 determinants upon which the option price will be determined. That is the current price, strike price, time to expiration, implied volatility of the stock price, risk-free interest rate, the dividend expected during the life of the option. Okay, let's go with the one by one. The current stock price means it is prevailing in the market based upon which the future price will be going to determined, right? That is why the option premium keeps fluctuating with the price of the underlying stock. The rate of change will be the highest for the strike price, closer to the spot price. For strike prices far from the market price, the rate of change of option premium will be lower. But at times, don't be shocked if you see the price of the underlying is increasing, but the price of your call is decreasing. That is, everything which will be going to determined based on the future assumption or future what we can say future price. What is the future price? Okay, and the strike price, it is the price at which a call owner may purchase a stock and the put owner may sell stock. In the case of a stock split, there would be change in the strike price. That is, strike price means at the end of the contract, what is the price, that is we are going to call as the strike price, right? In the case of a stock split, there would be change in the strike price. That is, if I'm going to split the stocks 50-50, so then there will be change. Okay, and the calls become more expensive as the strike price moves lower. That is call option means buying. It becomes more expensive when the strike price moves with a lower and lower. ಅಂದರೆ ಈಗ ಪ್ರೈಸ್ ಜಾಸ್ತಿ ಇದ್ದು ಫ್ಯೂಚರಲ್ಲಿ ಪ್ರೈಸ್ ಕಮ್ಮಿ ಆಗುತ್ತೆ ಅಂತ ಹೇಳಿದ್ರೆ ಆವಾಗ ಏನಂತ ಹೇಳಿದ್ರೆ ಬೈಯಿಂಗ್ ಆಪ್ಷನಿಗೆ ಜಾಸ್ತಿ ಎಲ್ಲರೂ ಕೂಡ ಪ್ರಿಫರ್ ಮಾಡ್ತಾರೆ. ಓಕೆ, ಆಲ್ಸೋ ಪುಟ್ಸ್ ಬಿಕಮ್ ಮೋರ್ ಎಕ್ಸ್ಪೆನ್ಸಿವ್ ಇನ್ ವ್ಯಾಲ್ಯೂ ಆಸ್ ದ ಸ್ಟ್ರೈಕ್ ಪ್ರೈಸ್ ಇನ್ಕ್ರೀಸಸ್. Also, an options premium, intrinsic value plus time value, decreases as the option becomes more deeply out of the money. The strike price determines whether or not as option has any intrinsic value. The time to expiration, the longer the time to expiration date, the more valuable the call or put options. It is because there is greater the probability of call or put option. A time factor can decrease option value at a faster rate as it gets closer to expiration. That is, time to expiration, it is based on purely the which kind of a thing we are going to follow, whether we are going to follow OTC or whether we are trading in the exchange traded derivative market. Okay, and the next is the implied volatility of the stock price. Volatility is a measure of how rapidly and how widely a stock price swings up and down, right? Volatility means how the stock price movements or how the stock price fluctuations will going to take place. Okay, an option of a volatile stock is much more expansive than one of a less volatile stock. Okay, less volatile stock. Remember, a small change in the volatility estimate can have a big impact on an options price. The risk-free interest rate. When interest rates are on the rise, the value of call options rise and the value of puts will fall. Interest rates hikes perhaps 20%. You have rupees 1 lakh in the money market that you would like to invest in stocks. You can either buy the stocks today or for a fee buy a call option which gives you control of the stock but allows you to defer a payment. So you buy the call option and hang on to your money and continue the earn interest. It means nothing but you just need to fix the lowest interest rate only, because the interest rate, it acts as the premium will be going to pay to the seller. Okay, so if profitable, then you can enjoy much more. So it is better to fix the rate of interest at lesser rate. Okay, and the last determinant is the dividend expected during the life of the option. That is, stock dividends also have a little effect on option prices. Call prices fall and put prices rise with all other factors remaining same. Okay, it is because the price of the stock is reduced by the amount of the dividend for the next trading session. So that is why the stock dividends value, how it is going to changes or remain same means, if ಕಾಲ್ ಪ್ರೈಸಸ್ ಫಾಲ್ ಆಗುತ್ತೆ, ಪುಟ್ ಪ್ರೈಸಸ್ ರೈಸ್ ಆಗುತ್ತೆ ಅನ್ನೋದಾದರೆ ಆವಾಗ ಡಿವಿಡೆಂಡ್ ಏನಂತ ಹೇಳಿದ್ರೆ ಕಾನ್ಸ್ಟೆಂಟಾಗಿರುತ್ತೆ, ಅಥವಾ ಇಟ್ ವಿಲ್ ಬಿ ರಿಮೈನ್ ಸೇಮ್. ಬಟ್ ಅದೇ ಏನಾದರೂ ಡಿಫರ್ ಆದರೆ, ಇಟ್ ಈಸ್ ಬಿಕಾಸ್ ದ ಪ್ರೈಸ್ ಆಫ್ ದ ಸ್ಟಾಕ್ ಈಸ್ ರೆಡ್ಯೂಸ್ಡ್ ಬೈ ದ ಅಮೌಂಟ್ ಆಫ್ ದ ಡಿವಿಡೆಂಡ್ ಫಾರ್ ದ ನೆಕ್ಸ್ಟ್ ಟ್ರೇಡಿಂಗ್ ಸೆಷನ್. ಓಕೆ, so hereby we completed this one. So along with that, in the previous video only I have explained to this, but let's go in detail. That is, increase in the factor, that is stock price increase. If it is increases, then call prices increases and put prices decreases. If excise price increases, then call price decreases and put price increases. Risk-free interest rates, if call price increases, put price decreases. Volatility increases, then call price also increases and put price also increases. And time to expiration, if increases, then call price also increases and put price also increases. Dividends, if dividend if increases, then call price decreases and put price increases. Okay, and the next is intrinsic value of call and put options. So intrinsic means, I already told you, it's the difference between the market and the strike price of an option. It is called as the intrinsic value. This value can be either positive if it is in the money, and zero if it is at the money or out of the money. Okay, keep in mind that an asset cannot have the negative intrinsic value. If the asset have the negative value, then it is not at all considered as the valuable contract. Okay, so this is why the intrinsic value means. Okay, time value of call and put options. The time value, when the factor to determine the premium is dependent upon the time left to exercise the option, it is called time value. Okay, for instance, if the time left between the current date and the expiration date for contract A is longer as compared to contract B, then contract A has a higher time value than contract B. That is, ಈಗ ನೋಡ್ರಿ, ಕಾಂಟ್ರಾಕ್ಟು ಕರೆಂಟ್ ಡೇಟಿಗೆ ಮತ್ತು ಎಕ್ಸ್ಪೈರೇಷನ್ ಡೇಟಿಗೆ ಕಾಂಟ್ರಾಕ್ಟ್ ಎ ಮತ್ತು ಕಾಂಟ್ರಾಕ್ಟ್ ಎಗೆ ಕಂಪೇರ್ ಮಾಡಿದ್ರೆ ಕಾಂಟ್ರಾಕ್ಟ್ ಬಿ ಇದು ಲಾಂಗ್ ಇರುತ್ತೆ. ಆವಾಗ ಏನಂತ ಹೇಳಿದ್ರೆ, ಎ ಕಾಂಟ್ರಾಕ್ಟ್ ಏನಿದೆ, ಇಟ್ ವಿಲ್ ಹ್ಯಾವ್ ದ ಲಾಂಗೆಸ್ಟ್ ವ್ಯಾಲ್ಯೂ ಆರ್ ಲಾಂಗೆಸ್ಟ್ ಟೈಮ್ ಟು ಕಂಪ್ಲೀಟ್ ದ ಕಾಂಟ್ರಾಕ್ಟ್. ಓಕೆ, that is only here, means whose contract is have the longer time duration, they will enjoy the more benefits, and along with that they will also enjoy the certain deficiencies as well. Okay, for instance, if the time left between the current date and the expiration date for contract A is longer as compared to contract B, then contract A has a higher time value than contract B. Next, certain basic terminologies which I already explained to you. Strike price. Strike price is the price at which buyers and sellers decide to buy or sell the underlying asset after a specified period, right? And spot price means it is nothing but the current price of the underlying asset in the stock market. And option expiry. Options contracts expires on the last Thursday of every month of the month. Okay. ಅಂದರೆ ಪ್ರತಿ ತಿಂಗಳ ಗುರುವಾರ ಏನಿರುತ್ತೆ ಲಾಸ್ಟ್ ವೀಕಲ್ಲಿ ಆ ಟರ್ಮಲ್ಲಿ ಎಂಡ್ ಆಗುತ್ತೆ. ಓಕೆ, ಆಪ್ಷನ್ ಕಾಂಟ್ರಾಕ್ಟ್ಸ್ದು ಎಕ್ಸ್ಪೈರಿ ಡೇಟ್. ಆಪ್ಷನ್ ಪ್ರೀಮಿಯಮ್ is the non-refundable amount paid upfront by the option buyer to the option seller, right? That is, we are going to provide certain interest to the seller what we have taken the asset on the basis of contract, right? And the settlement means option contracts are cash settled in India. In cash only the contracts will get settled, that is, it may be in the digital one. Okay. Next is payoffs for a call option buyer and seller at expiration. Okay. That is, call option payoff refers to the profit or loss that an option buyer or seller makes from a trade. Okay. Call option payoff means nothing but it is a profit or the loss which will be going to arise from the contract. Okay, remember that there are three key variables to consider when evaluating call options, that is strike price, expiration date and premium we are going to consider, right? These variables calculate payoffs generated from call options. Okay, these variables calculate payoffs generated from call options. There are two cases of call option payoffs. Payoff means it's nothing but the profit or loss which will be going to arise from the contract. Okay, and for that the three variables will be going to consider: strike price, expiration date and the premium what we have paid. Okay, and these variables calculate payoffs generated from call options. And ಈ payoffsನ್ನು ನಾವು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡೋದು ಓನ್ಲಿ ಬೈ ಐಡೆಂಟಿಫೈಯಿಂಗ್ ದ ಕಾಲ್ ಆಪ್ಷನ್ ಕಾಂಟ್ರಾಕ್ಟ್ಸ್. ಓಕೆ, ಆ್ಯಂಡ್ ದೆರ್ ಆರ್ ಟೂ ಕೇಸಸ್ ಆಫ್ ಕಾಲ್ ಆಪ್ಷನ್ payoffs. ಲೆಟ್ ಅಸ್ ಡಿಸ್ಕಸ್. Suppose you purchase a call option for ABC for a premium of 2. The option strike is 50 and it has the expiration date of November 30. You will break the investment of your 252. Meaning the sum of the premium paid plus the stock's purchase price, any increase above that the amount is considered a profit. Thus, the payoff when ABC's share price increases in value is unlimited. What happens when ABC's share price declines below 50 by November 30? Since your options contract is a right and not an obligation to purchase ABC shares, you can choose not exercise it, meaning you will not buy ABC's shares. Your losses in this case will be limited to the premium you paid for the option. Okay, payoff is equal to spot price minus strike price. Profit is equal to payoff minus premium paid. Okay, these are the two formulas. In binomial model we already calculated, right? Same. Okay, in the same way. Payoff is equal to market price minus strike price minus premium. Okay, that you need to always remember. Okay, just wait. Okay. Okay, see here, payoff is equal to what? Market price minus strike price minus premium. that you should always remember. Okay, payoff is equal to market price minus strike price minus premium. If in the problem they have given the lot size, then multiplied by lot size. Okay, you should always remember this in your mind. Okay, so let's go with the next example, that is a payoff for call option. Okay, I don't want to explain here because in the problem itself you will come to know how it is anta. Okay, just you observe the thing. Okay, see here also how to calculate payoff means market price at the expiry of the contract minus strike price minus premium amount into lot size. ಅದ್ರ ಮೇಲೇ ಇಲ್ಲಿ ಒಂದು ಎಕ್ಸಾಂಪಲ್ ಕೂಡ ಕೊಟ್ಟಿದ್ದಾರೆ ಅಷ್ಟೇ. ಸೆನಾರಿಯೋ 1, ಸೆನಾರಿಯೋ 2, ಸೆನಾರಿಯೋ 3 ಇದ್ದರೆ ಹೇಗೆ ವೇರಿಯೇಷನ್ ಆಗುತ್ತೆ ಅಂತ ಹೇಳಿ. ಓಕೆನಾ, ಇಲ್ಲಿ ಎಲ್ಲನೂ ಏನಂತ ಹೇಳಿದ್ರೆ ಜಸ್ಟ್ ಇದನ್ನು ಕೊಟ್ಟಿದ್ದಾರೆ, ಶೇರ್ಸ್ ಎಷ್ಟಿದೆ ಅಂದರೆ ಲಾಟ್ ಸೈಜ್ ಎಷ್ಟು ಅಂತ ಹೇಳಿದ್ದಾರೆ. ಸೊ ಅದನ್ನು ನಾವು ಮಲ್ಟಿಪ್ಲೈ ಮಾಡಿಕೊಂಡು ತಗೋತೀವಿ ಅಷ್ಟೆ. ಓಕೆ, ಸೊ ಈಗ ಹೈ ಇದ್ದಾಗ ಮಾತ್ರ ಪ್ರಾಫಿಟ್ ಆಗುತ್ತೆ. ದಟ್ ಈಸ್ ಇಲ್ಲಿ ನೋಡಿ, ಇಲ್ಲಿ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಏನಿದೆ 165 ಇದೆ, ಇಲ್ಲಿ ಸ್ಟ್ರೈಕ್ ಪ್ರೈಸು 150 ಇದೆ. ಓಕೆ, 150ಗಿಂತ ಯಾವಾಗ ಜಾಸ್ತಿ ಬಂದಿದೆ 165 ಆವಾಗ ಮಾತ್ರ ಪ್ರಾಫಿಟ್ ಆಗಿದೆ. ಈಗ ಅದೇ ನೀವು 151ಗೆ ಕಂಪೇರ್ ಮಾಡಿಕೊಂಡ್ರೆ ಆವಾಗ ಇಲ್ಲಿ ಲಾಸ್ ಬರುತ್ತೆ. ಓಕೆ, ಆಮೇಲೆ ಇಲ್ಲಿ 140 ಅಂತ ನೀವು ಕನ್ಸಿಡರ್ ಮಾಡಿಕೊಂಡ್ರೆ ಅಗೇನ್ ಲಾಸ್. ಓಕೆ, ಇದು ನಾವು ಪ್ರಾಬ್ಲಮ್ ಫಸ್ಟಲ್ಲೇ ನಾನು ಹೇಳಿದ್ನಲ್ಲ ನಿಮಗೆ, ಹೇಗೆ ಅಂತ ಹೇಳಿದ್ರೆ ಆ ಹೈ ಬಂತು ಅಂತ ಹೇಳಿದರೆ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸು ಕರೆಂಟ್ ಅಪ್ಸ್. ಓಕೆ, ಅದು ಯಾವಾಗಲೂ ಆ ಸೆನಾರಿಯೋದಲ್ಲಿ ಪ್ರಾಫಿಟ್ಟೇ ಆಗುತ್ತೆ. ನೀವು ಲೋಗೆ ಬಂತು ಅಂತ ಹೇಳಿದ್ರೆ ಲಾಸ್ ಆಗುತ್ತೆ. ಆ ಲಾಸ್ ಏನಾಗಿರುತ್ತೆ ಅದನ್ನು ನಾವು ಸೆಟ್ ಆಫ್ ಮಾಡ್ಕೋತೀವಿ. ಓಕೆ, ನೆಕ್ಸ್ಟ್ payoffs for a put option buyer and seller at expiration. Okay, a put option is a financial agreement that gives its buyer a right to sell an asset such as a stock or a bond at a price and a time that have been pre-decided at the time of entering into the contract. The put option buyer does not have an obligation to complete the sale at the time of expiry of the contract. It depends upon the market price of his asset at that time. There are two parties to the contract in such options, that is the buyer and the seller. Okay, the payoff for a put option is the profit or loss of the option under different market prices of the underlying asset at the time of expiry. Okay, see here in your binomial or in your Black Scholes model, we will just going to calculate the things for call option, and there is no other option for put option. Okay, here whatever the treatment will be there, that is purely a opposite direction of this. Okay, that is here how you will be going to consider this one means, in call option first we will be going to take the market price, but if it is a put option then first we will be going to take the strike price. Okay, ಈಗ ಕಾಲ್ ಆಪ್ಷನ್ ಬಂದಾಗ ಈ ಫಾರ್ಮುಲಾ ಕರೆಕ್ಟು. ಓಕೆ, ಇಲ್ಲೇನಂತ ಹೇಳಿದರೆ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸನ್ನು ನಾವು ಫಸ್ಟ್ ತೊಗೋತೀವಿ. ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಅಟ್ ದ ಎಕ್ಸ್ಪೈರಿ ಆಫ್ ದ ಕಾಂಟ್ರಾಕ್ಟ್ ಮೈನಸ್ ಸ್ಟ್ರೈಕ್ ಪ್ರೈಸ್ ಮೈನಸ್ ಪ್ರೀಮಿಯಮ್ ಅಮೌಂಟ್ ಇಂಟು ಲಾಟ್ ಸೈಜ್ ಅಂತ ತಗೋತೀವಿ. ಅದೇ ನೀವು ಪುಟ್ ಆಪ್ಷನ್ನಿಗೆ ಬಂದರೆ, ಪುಟ್ ಆಪ್ಷನ್ನಿಗೆ ಬಂದರೆ ಹೌ ಯು ವಿಲ್ ಬಿ ಗೋಯಿಂಗ್ ಟು ಟೇಕ್ ಮೀನ್ಸ್ ಲೈಕ್ ದಿಸ್, strike price will be first minus market price minus premium into lot size. Okay, like this we will be going to take it. ಅದೇ ಕಾಲ್ ಆಪ್ಷನ್ ಆದರೆ ಫಸ್ಟು ಮಾರ್ಕೆಟ್ ಪ್ರೈಸನ್ನು ತಗೋತೀವಿ ಮೈನಸ್ ಸ್ಟ್ರೈಕ್ ಪ್ರೈಸ್ ಮೈನಸ್ ಪ್ರೀಮಿಯಮ್ ಇಂಟು ಲಾಟ್ ಸೈಜ್. ಓಕೆ, ಲೈಕ್ ದಿಸ್ ವಿ ಆರ್ ಗೋಯಿಂಗ್ ಟು ಟೇಕ್ ಇಟ್. ಕಾಲ್ ಆಪ್ಷನ್ ಆದರೆ ಈ ಥರ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಮೈನಸ್ ಸ್ಟ್ರೈಕ್ ಪ್ರೈಸ್ ಮೈನಸ್ ಪ್ರೀಮಿಯಮ್ ಇಂಟು ಲಾಟ್ ಸೈಜ್. ಅದೇ ಪುಟ್ ಆಪ್ಷನ್ ಆದರೆ ಈ ಥರ ಸ್ಟ್ರೈಕ್ ಪ್ರೈಸ್ ಮೈನಸ್ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಅಟ್ ದ ಎಕ್ಸ್ಪೈರಿ ಆಫ್ ದ ಕಾಂಟ್ರಾಕ್ಟ್ ಮೈನಸ್ ಪ್ರೀಮಿಯಮ್ ಇಂಟು ಲಾಟ್ ಸೈಜ್. ಓಕೆ, ಸೊ ದಿಸ್ ಈಸ್ ಅಗೇನ್ ಇಲ್ಲಿ ಹೆಂಗಾಗತ್ತೆ ಅಂತೇಳಿದರೆ ಸಿಚುವೇಶನ್ಸ್ ಇದು. ಇಲ್ಲಿ ಆಲ್ಮೋಸ್ಟ್ ನಮಗೆ ಎಲ್ಲ ಕೇಸಸಲ್ಲೂ ಲಾಸೇ ಬರುತ್ತೆ. ಓಕೆ, ಯಾಕಂತೇಳಿದರೆ ಯಾವಾಗಲೂ ಸೆಲ್ ಮಾಡುವಾಗ ಪ್ರೈಸ್ ಕಡಿಮೆ ಆಗಬಾರ್ದು, ಬಟ್ ಇಲ್ಲಿ ಪ್ರೈಸ್ ಕಡಿಮೆ ಆಗ್ತವೆ. ಓಕೆ, ಹಾಗಾಗಿ ಏನಂತೇಳಿದರೆ ಎಲ್ಲ ಸಿಚುವೇಶನ್ಸಲ್ಲೂ ಲಾಸ್ ಬರುತ್ತೆ. ಹಾಗಾಗಿ ಬೈನೋಮಿಯಲ್ ಮಾಡೆಲ್ ಇರ್ಬೋದು ಅಥವಾ ಬ್ಲ್ಯಾಕ್ ಸ್ಕೂಲ್ಸ್ ಮಾಡೆಲ್ ಇರ್ಬೋದು, ಆಲ್ಮೋಸ್ಟ್ ನಾವೇನಂತ ಹೇಳಿದ್ರೆ ಕಾಲ್ ಆಪ್ಷನನ್ನು ಐಡೆಂಟಿಫೈ ಮಾಡ್ಕೊಳ್ಳೋಕ್ಕೇ ಅದನ್ನು ಅಥವಾ ಕಾಲ್ ಆಪ್ಷನ್ನಲ್ಲಿ ಏನೆಲ್ಲ ವೇರಿಯೇಷನ್ಸ್ ಆಗುತ್ತೆ ಅನ್ನೋದನ್ನು ನೋಡ್ಕೊಳ್ಳೋದಕ್ಕೋಸ್ಕರನೇ ಇದನ್ನು ಕಂಡುಹಿಡ್ಕೊಂಡಿರೋದು. ಓಕೆನಾ? So in the next videos, just I'll make the videos on binomial model and black school's model, and another video put call parity relationship. Okay, if those are completed, then your syllabus will get ends. Okay, if you have any doubts or if you need any clarification about the any concept, please let me know. Okay, thank you, and watch all the videos so that you will come to know the certain concepts. Okay, and your syllabus is most repetitive type of aspects. Okay, that is why